Just going south on.
All right, so we're going to go ahead and get started. So if you want to talk or anything, feel free. So first, we're going to have Chris from the auditor's office. Chris and I will talk a little bit about Homestead. There's some take-home information in your packet there. We're not going to go slide by slide on it, but she'll present a little bit. And after she's done, you can ask questions if you like. And then afterwards, our county treasurer, Angie McIntyre, will present on different options for payments, payment plans, online billing, all that type of thing. And we are live streaming as well online. If you got folks watching from home if they couldn't make it in. But Chris will go ahead and talk, and feel free to ask questions after, and we'll have Angie come on. So
Your office close to theirs? I know where your office is.
Yeah, we're right across the hall.
I can find you.
Yep. Yeah,
I know where you're at.
right there at the courthouse. So Chris, go ahead and take it away.
Okay, the Homestead program is for people 65 years or older or totally permanently disabled. You can apply in the year that you turn 65. Taxes are paid a year in arrears, meaning if you turn 65 in calendar year 2022, you're eligible for tax year 22. That is payable in calendar year 23. A little confusing, but proof of disability must be provided. We must see a letter from a state or federal agency certifying your permanent and total disability status. For example, that would be Social Security, Railroad Retirement Board, Bureau of Workmen's Compensation. If you don't have something from a state or federal agency, that's fine as well. We have a disability certificate that can be signed by your licensed physician or psychologist. You must be disabled as of January 1st of the year you are applying for. The applicant must be an owner and residing in the home. There are some situations that will allow you to qualify. If you own another home and reside there part-time, it's for your primary residence, and kind of the rule of thumb is where you're registered to vote, where your driver's license is listed, where you file your income tax. That tells us kind of where your primary residence is. If the property is in a revocable or irrevocable trust, you must be the settlor. A trustee of a trust in which the homestead is held as deemed landowner who is eligible for that exemption. Another exception would be if the property is in a life estate, and you put it in one of your children's name. As long as you put it in a life estate, allow you to live there the rest of your life, then that does make you eligible for homestead as well. You also
No, wait a minute. What about the income? The income, well, mad about.
I haven't got there.
But you already said that you put it in your kids'. Now, we go off their income still, or you go off the original?
It's just you, just
All right.
applicant and spouse.
All right.
You also, if you're purchasing it under a land contract, as long as it's a recorded land contract, it is eligible. We would just need to see a copy of that land contract that has been recorded in the recorder's office. In a mortgage situation, if for chance your spouse who is eligible is not on the deed, if there's an outstanding mortgage with a balance, that would make them eligible as well. The exemption, well, I should say this too. If you're temporarily put in a nursing home for rehab with intentions of certainly going back, you would still qualify. However, if you enter a nursing home with, you know that that's going to be your permanent residence, you would be ineligible at that time. The exemption removes $25,000 from the market value of your home. It is then calculated times your effective tax rate. The savings averages, depending on your tax rate, around $400 per year is what it removes from your taxes. Your Ohio adjusted gross income may not exceed $34,600. This figure is found on line 3 of your Ohio income tax return. This figure does not include Social Security. And it is a total household income of the spouse, you and the applicant and the spouse.
And that was changed back in 2013. So
Correct.
prior to 2013, state legislature allowed for no means testing of the homestead program. 2013, legislature passed a different law, essentially mandating a means testing with an increase in inflation every year. So only the legislature can actually change that back to no means testing or change the qualifications for homestead.
Okay, we also have an enhanced veterans exemption, which in essence, doubles the homestead exemption. And I don't think I had mentioned that. On the homestead exemption, it takes 25,000 off your market value. I don't know if I said it or not. With the veterans, that is a 50,000 exemption off. So it kind of doubles what you would receive if you were receiving a homestead fire. To qualify for that, you have to be 100% disabled from a service-connected disability or 100% compensated due to individual unemployability. What we need for that is a copy of the rating letter from the Veteran Services and a copy of your DD 214.
So Homestead is pretty straightforward. Essentially, if you qualify, we take $25,000 off the value of your home for tax purposes. Usually it's about $400 to $500 savings, depending on your tax rate, where you live, anything like that. You don't have to apply for it every year. Once you have it, you have it. And then once you don't qualify, then you would be removed from the program. But it is as Chris said, pretty straightforward, easy to understand program. But all the qualifications are kind of listed there. You would apply through our office. We send it down to the state. State says yes or no in terms of qualifications, and then we get the response back, and then we'll either add you or we'll send you a form saying, unfortunately, you don't qualify based on this requirement.
Yeah, we'll send you a letter either way, and then you know approval or.
Any questions on Homestead?
Yeah, you said social security.
You said the maximum amount to be made is $34,600, but Social Security is not included in that.
No, you do not include that in that.
So good kind of rule of thumb, when you file your taxes, line 3 of your Ohio tax return, which is your Ohio adjusted gross income, that's the income that the state uses to qualify or not qualify you. So wide variety of different income either could or could not qualify for line 3 of your Ohio adjusted gross income. So you can either look at your tax return. That's essentially what the state will exactly use, is the taxes that you filed to look and see qualify or not qualify.
Okay, so if that amount is over $34,600 for this year, you're not eligible.
Correct.
Correct. You could try again next year. The state does increase it a little bit each year. It's not a whole lot. I don't know,
It's usually about
roughly
$600 a
somewhere
year.
around there. Yeah, like they'll increase it a little.
Well, I just retired effective 1st of January.
Okay.
So that's, okay.
Yeah. So again, we can let you know what it is whenever we find out for the following year. If we didn't qualify this year, it's certainly apply next year.
Okay.
All right. If there's no other questions, then our county treasurer, Angie Mackey-Cliff, will come up and present a little bit about tax payments options and some really helpful things that you might find when it comes time for property tax.
So we do have applications if anybody would like to take them before you go. There's also envelope to mail it back. You can take it now, and if it doesn't, work for you this year, you can certainly hold on to it, make sure that they don't change. So, thank you.
Thank you, Chris. Good evening. I am Angie Mackey-Cliff, your Ashtabula County Treasurer. Thank you for joining us this evening to talk a little bit about payment plans and some of your payment options in the Treasurer's office. I'm going to start by talking about our escrow prepayment plan. An escrow prepayment plan is a payment plan that we offer within the Treasurer's office because in these current times, sometimes it's very challenging for people to budget to make their semi-annual tax payment in February and in June. When people get that large tax bill, sometimes it's overwhelming and they're not sure where that money is going to come from. So we offer this escrow plan or a prepayment plan within the Treasurer's office to allow people to budget monthly to pay that tax obligation. So what happens is generally those prepayment plans will start in the month of August, and you'll have these 11 equal monthly payments followed by one final payment in the month when that July payment comes due. We get that when we're budgeting for that, when we're helping to figure the calculation for that, we're using the previous year's adjusted tax rate. And so we are not exactly sure. This is an estimation based on what David has figured your taxes out for the previous year. So your taxes could go up or they could go down based on what goes on the ballot, what levies you have, or what your tax values are. So we'll use that previous year's adjusted tax rate to kind of come up with what your payments will be. And then that final payment, the reason that won't be an equal payment is because it could be more if your taxes have gone up, or it could be less. when that final payment comes. Now, if you don't start paying into the escrow prepayment in August and you don't have a full year's worth of payments, then obviously you're going to have less than 11 equal payments and then a final payment you'll have. And then, so your monthly payments will be a little bit more when you first start. But ideally, everyone would enter into the plan beginning in August, so they would have that one final payment each year. The escrow prepayment plan, look, I'm all tongue-tied this evening, is free. There's no cost to anyone to enter into this plan. It's just simply a budgeting tool that we offer to make it easier for our taxpayers to be able to make these payments so that it's not such a shock when you get that tax bill each year. All you have to do is fill out the escrow prepayment application. There are some here with me today, but it's also on my website, www.ashtabulacounty.us/treasurer or ashtabulacountytreasurer.org. It's under the forms section. You can also click on the payment plans section of the website if you want to read about the payment plans, or just click on the forms section, and it's a fillable form that you can print, or you can just print it and fill it out. Send it to us, give us a call, we can mail it to you if you don't have a printer access, and then we can get you set up for that. And when you use the escrow prepayment plan, we will mail you coupons each month, and you can mail that payment back with your coupon. There's also a sticker that comes with that, so it's a self-addressed sticker that you can put on the envelope to mail your payment back. These are just suggested payments. If you can't make a payment one month because your car broke down or you needed to pay the plumber, there's no penalty for that. It's not that you missed a payment and now you're getting penalties and interest, because remember, this is a prepayment plan. Your taxes are not due yet. Your taxes are not due until you get that tax bill in January to be due in February, or in June to be due in July. That's when your taxes are due. So this is just that budgeting tool to help you be ahead. What will happen if you miss a payment is you can mail it in when you get it, or you can wait for it to be attached to that final bill at the end. So there's no penalty if you miss a payment. You can either fall back in line when you have the money, or you can pay it on the end. No penalties attached to that. We also offer ACH. So if someone says, I really want to make my payments each month, I don't want to have to put a stamp on that envelope, I just want to give you my bank account information. For escrow prepayment, we take your banking information and we can automatically withdraw it from your account on the 15th of each month. Again, if you need to skip a payment, we can do that. You just need to let us know 7 days in advance, because we have to upload a file to the bank to let them know these are the people that we're going to take their money from. We're going to take their money from. That's not great. We're going to take your money. And then if we have to remove you from that file, we have to have enough time to let the bank know, or to remove you from that file so that we don't process that payment. So that's the only thing with the ACH is we have to have at least 7 days notice. Another payment plan Treasurer's Office is our delinquent tax contract. Sometimes people get behind on their taxes. We've had, you've lost a job, or you had to take a lower paying job and you got behind on your taxes. It is never ever the goal in the Treasurer's Office for us to take someone's property. So we have delinquent tax contracts. The beauty of a delinquent tax contract is when you get behind on your taxes and you enter into a delinquent tax contract, it puts the penalties and the interest on hold during the duration of the delinquent tax contract. Many times I see people, and I just started as your treasurer. I just took office in September, and I've already seen this. So often I see payments come through and it's for $50, and the tax delinquency is thousands of dollars. And people are making $50 payment, $50 payment, $50 payment, and it's just not enough. But they haven't entered into a delinquent tax contract. So you're still getting penalties and interest on top of that. If you enter into a delinquent tax contract with the Treasurer's Office, now the penalties and interest are on hold. So you can, that payment that you're making is actually going to your taxes, not to the penalties and interest. So you can actually pay that tax bill, get above water, and then move on. One of the things about entering into a delinquent tax contract is we do require that in tandem, you are in an escrow prepayment plan, because you have to be current on your taxes, on your today taxes, your current taxes, while in a delinquent tax contract. So your one plan here, your delinquent tax contract to pay those back taxes, and then a prepayment plan to pay those future taxes, so we know that you're not going to have any more delinquencies. So we do require that if you enter a delinquent tax contract, that you also have that escrow prepayment plan. Where one thing about a delinquent tax contract is you do have to own the property, be the owner occupant. And you can't be, well, we do not typically extend them to people who are in bankruptcy or foreclosures because there's some court action that's taking place there. Even though you do need to be an owner occupant to enter into a delinquent tax contract, we do extend them to farmers who are trying to save their farmland. Delinquent tax contracts, according to the Ohio Revised Code, can be anywhere from 2 to 5 years. In my office, we try to write them for 2 years to get them paid off as quickly as possible. But if it does not fit your budget, we will write them the 5 years. At the end of, let's say we write yours for 2 years and you just can't do it, you can't get it paid off. The treasurer does have the discretion to extend a delinquent tax contract. So there's no worry about that. In order to apply for a delinquent tax contract, the same thing. I have applications available here today, or they are available on the treasurer's website. Any questions about those delinquent tax contracts or payment plans? Wonderful. I'd like to add to that, like I discussed last week, I don't know if anyone here watched that, is that sometimes, even though we have these things available in the treasurer's office, I will make a prosecutor referral. And that doesn't mean that I want to take your property either. Again, I will see people constantly making these payments and not getting their head above water because they're not making enough. And as I said, you need to be an owner occupant. Even though we can on occasion extend a delinquent tax contract to a commercial property, it's very rare. And there's a lot of criteria that has to be met. So I may send someone who owns a business to the prosecutor's office. And that's not because I want to close the business, it's because I want to save the business. Because I can see that they're making payments all over the place and they're just not getting ahead. And to avoid a foreclosure, I will send them to the prosecutor because I want to get them in a payment plan. The prosecutor's office has a broader scope in their payment plans that they can offer. So when I make a prosecutor's referral, it's because I want to get someone on a payment plan and it's a payment plan that the prosecutor can offer them to help save their property, not to take their property away. So if anyone here today or anyone listening gets that letter that I sent them to the prosecutor's office, instead of saying, that Angie McCliff's trying to take my property, on the flip side, I'm trying to save your property. I want to see you stay in your property. So whenever you get that letter, just work with the prosecutor's office and get that payment plan set up so we can save your property. Moving on from payment plans, something that we just rolled out in the treasurer's office after I took office was being able to pay your taxes with a credit card at the office. So previously you could only pay by credit card online through a third party. And it was $2.50 per parcel for e-check, and it was 2.5% for a credit card. We are still $2.50 per parcel for e-check. However, I've been able to reduce our fee for a credit card to 2.35%, and we've broadened the use. You can now make it by phone in the treasurer's office, and you can pay that window at the treasurer's office. So that's some really great things that you can do. You can also pay online at the treasurer's website. It is a secure link. It's on the treasurer's website. If you click the payment link on the website, it will automatically forward you to a secure link to pay your taxes that way. I highly recommend anyone who has the funds in their checking account that can pay by e-check to do e-check, because when you have a large tax bill, that $2.50 is much less to absorb than 2.35%. All of it is less than 10% penalty that you might get if you don't pay your taxes on time at all. So anyone who says, oh, 2.35% is a lot of money, I'm going to take my chances, with the mail, or I'm going to try to get in there, or whatever it is. If you think your tax bill might not make it on time, I would highly recommend logging on and paying it online, because that 2.35% or $2.50 is most definitely less than a 10% penalty. Something else that I rolled out that we're going to be doing for the first time for second half taxes, I sent a notice in our first half tax bill is e-bill. So anyone who is worried about a carbon footprint, or people who maybe go to Florida during the winter, or someone who just doesn't necessarily trust the mail system or likes to reduce paper or clutter, you can get your tax bill via email. And that is the very last link on my website. It's in the left margin, the last link. It says e-bill. You click on that, it again forwards you to a secure site where you put in your name and your parcel number. The name that they want is your mailing address name And if two people own the property, they only want the first person's name that's on the bill. So you want to put that in there and your parcel number so you can sign up for e-bill. If you don't know your parcel number, you can get that off of David's website. So you go to the Ashtabula County Auditor's website and you can search your parcel by address or by your name. Once that pops up, your parcel number will be on there and you can use that to register. If you have any questions, you can always call my office, the Ashtabula County Treasurer's Office, and we would be more than happy to assist you with registering for e-bill. That's.
So do you guys have any questions for us or any other online? Okay. We've got, Homestead that you'll work with Chris on. If you have your application time, you can print that off, come to the office. Owner occupancy is another credit. If you own your home, live in it, you can apply for that right now. More than likely you already have it. Most folks in the county do, but it's a good thing to check on our website under your property. It's about $45 savings a year. So something great to apply for. And then Angie's options for payment plans or the e-billing, I think is going to be something exciting.
And a quick add, David, just because we have a couple minutes, is I get a lot of emails and phone calls asking people asking me to change their address or to change the name. Maybe someone in their family has passed away, and so they want me to change the address, or they want me to change the name. In my office, we can only change the mailing address, the tax bill mailing address. Anything else has to be done. If you have a family member who has passed away, it has to go through probate. Once it has gone through probate, then that has to be changed. The name has to be changed on the deed. And then it can go to David's office and be conveyed to that new owner's name. But that is not something that David nor I can do. We're very limited. We can't just put a parcel in someone else's name. It has to go through probate. And I've been working actively with probate very recently to start an initiative to try to educate people in the county, because I get this so very often. So if anyone, maybe you're pre-planning, which is not something that people necessarily like to talk about, but in pre-planning, maybe cover that. But if you have someone, in order to change the name, the ownership name on the parcel, you have to go through probate or you have to sell the parcel. So that's something that you really need to take care of. So it'll go through probate, record the new deed, and then convey in David's office. Once all of that happens, the conveyance will come to my office and we would be more than happy to make those changes.
Lots of different roles and responsibilities that kind of are shifted between treasurer and auditor. We value property, assign a tax rate based on levies. Angie's office, treasurer's office, collects money and then actually gives it back to us where we disperse it to your local entities. So kind of a variety of different roles. But if you guys don't have any questions or anything, never hesitate to reach out to us. We're more than happy to help with anything. And we've got brownies and coffee in the corner if you want to take some home with you too. We appreciate you coming today and all the folks that have been watching online too. This will be recorded on YouTube. So if you do have anyone new wanted to attend or want to learn more but missed it, they can watch it up on our website too. We have a lot of resources there.